Well, it's a pretty tough morning out there, and there's no way to say it other than, we wish it weren't so, but there's going to be pain. I've been talking about this now for a while. I've been talking for at least 4 weeks that we're probably going to have a recession. There's going to be moments of pain. There's going to be apparently probably a few items in the grocery store that are going to be higher. Doesn't mean that all of them are going to be higher. Anyway, I'm going to take you through a story this morning. We're going to talk about the Trump chaos, the uncertainty that the Trump chaos is causing, and we're going to talk about what happens on the other side. So let's start here. Trump's negotiating method requires that he keep the other side off balance. He's trying to do a worldwide reset on the way that business is done, and he's doing it from the position of the most powerful economy in the world by a lot, and the only economy that was in okay shape. Now, it turns out that okay shape was basically being propped up by incredible spending by the federal government, and the employment was being propped up by incredible hiring by the federal government and state governments as well, and local governments. But it was unsustainable. You can't just keep doing that. But in the meantime, we go into these negotiations with countries all around the world from a position of absolutely being more powerful economically than they are. Now, do you want to use that to be a bully? No, but to a certain extent, what's happened is they've been I would not use Trump's exact words. We have allowed them to treat us badly. That's what he should really be saying. We have allowed them to treat us badly, to have high tariffs against us, to keep our products out, to keep our services out. That's not going to continue anymore, apparently. So you don't. So he doesn't want these other countries to be able to second guess whether he's serious or not. They have to believe that he is absolutely serious. And so I think that's why the tariffs on Canada and Mexico went into effect this morning, even as both of them did make some efforts to try to keep this from happening. I think he's just sending a message. Look, you can't predict what I'm going to do. You, you need to pay attention to what I'm saying. I really actually have a plan here, and it's going to be to everybody's benefit. It's a little hard to see that now, but you just need to get in line because we're calling the shots. Anyway, I'm going to get into more details in that with other people's opinions besides my own. The current stock price on Tesla has almost nothing to do with Elon's political situation. Yeah, I'm going to say $20 to $50, maybe, give or take, might have something to do with Elon's political position. But remember, the stock is still up 20% from where it was 6 months ago before the election. It's up 20% from where it was 6 months ago. As of this morning, after being down another 6% or whatever it is this morning, it is still up 20% from where it was 6 months ago. The ride to 480 was largely due to his ascent to Trump bro and the risk on market. Well, the risk on market is no longer true. It's a risk off market now. So the drop in prices is largely due to the fact that the market is down and to the fact that the nonsense really it's a much more realistic assessment now of what this Trump bro relationship means. And to some degree, it's negative. Okay, to some degree. Yeah, everybody believes that his being there, I believe that his being there is going to benefit Tesla in the long run, but in the short run, maybe not so much. But we're still up 21%. So Grok had this from some recent commentaries by Stifel, the investing company. Stifel has consistently expressed a bullish outlook on Tesla, adjusting their price target upward multiple times in the recent analysis while maintaining a buy rating. In their most recent statement on March 3rd, yesterday, they reported Teslarati reported it this way: Tesla gaining with Republicans as it loses traction with Democrats. Stifel maintained their price target of 474. They emphasized Tesla's shifting political favorability, noting Tesla is losing traction with Democrats but gaining with Republicans. The data showed a significant decline. This is a survey that they took or got somebody to take for them. The data showed a significant decline in Democrats' net favorability from 7% in February 2025 to a negative 15% in March 2025. So in a year, the net favorability was positive 7, went to negative 15, and an increase among Republicans from 11 to 27, almost exactly the same amount. Stifel tied this polarization to Elon Musk's political alignment with Donald Trump, suggesting it influences Tesla's brand perception. Now, I've been saying this for a year, maybe longer, maybe 18 months, that as Trump, Trump had a terribly negative perception with Republicans, and now he's got a much more positive with Republicans and has gone negative with Democrats. Earlier on January 6th, 2025, Stifel raised their price target from $411 to $492. They argued that the potential removal of the $7,500 federal tax credit for electric vehicles would benefit Tesla relatively, reinforcing their positive stance. Analyst Stephen Gengaro highlighted Tesla's long-term potential beyond EVs, stating, if you're buying the stock simply because they're selling EVs, the stock is overvalued. When you start thinking about the full self-driving initiatives, start thinking about how that plays into Cybercat business, that's really the volume driver. And he doesn't, of course, even mention Optimus. Tesla Chan says this morning about China. Tesla sold 30,688 vehicles in China in February, down 51% month over month compared to last year. Low production can be considered a production transition. In other words, we're having the transition to the Model Y, and it's the entire reason why the numbers are down in China. This is from the Jeff Lutz commenting on it. He says sales on a weekly basis now have returned to the prior year as they were changing over to Model Y, their top selling vehicle. Important context. Why does the FUD continue? And part of the reason Tesla's down so heavily this morning is because people are just looking at the headline number and they're not paying any attention to the underlying facts. Today, March 4th, 2025, Bank of America lowered its price target for Tesla from $490 to $380 a share. That probably is also impacting the stock this morning, while maintaining a neutral rating on the stock. This adjustment, they say, reflects concerns about Tesla's outlook for 2025, driven by renewed uncertainty due to U.S. tariffs. So the tariffs, of course, Tesla buys some products from Mexico and from Canada to put into the automobiles. Analyst John Murphy highlighted potential challenges, including President Donald Trump's tariffs on imported products from, and China as well, which began on March 4th. With retaliatory duties from China and Canada adding further pressure. These tariffs could disrupt Tesla's North American production estimates, potentially causing a supply shock similar to the COVID period. No, not at all. Not even. Okay. Additionally, Bank of America noted a year-over-year slowdown in Tesla's vehicle production in Europe, a lack of updates on a low-cost model, and possible souring brand sentiment as contributing factors to the reduced price target. Despite the cut, the 380 target still suggests over a 33% upside from Tesla's closing price yesterday, and much more than 33% after another $12 this morning, or whatever the last number was. I forget, because it was moving fast. So Bank of America has still got us at 380. Everybody else, the other people that we trust are in the 400s. I continue to say, and 600s and 800s, as I reported yesterday. Sawyer Merritt says this morning, Tesla has introduced 0% financing for Model 3 orders in the U.S. It applies to new orders placed on or after March 3rd and to loans of 60 months. You get a 99% or 0.99 rate on 72-month loans. So this is unsurprising. Ford and General Motors both reported yesterday lower sales in the United States. So car sales right now are off. But as we'll talk about throughout this article, all of this is temporary. It might be 3 months, it might be 6 months, but we are going to be in a little bit of a struggle. Meyer Thacker has this morning. He says, look, here are Tesla price targets worth buying at. You should buy at 270, at 250, and 220, he says. Hope we don't have to test 220, but I've been saying all along it could probably happen. Meyer goes on to say, I don't think we will fall below 220, which would be a back up the truck moment to buy. So I haven't felt this excited to buy in a very long time. So Meyer Thacker, who's sometimes not that positive, is very excited about the idea of being able to buy Tesla at 250 and 220. This is Randy Kirk, by the way. Hit the like, subscribe, and notify button, and I will send you a kiss or something. I'm not sure. Okay. Also, if you really want to get a kiss, sign up for Patreon and send me $3 a month. Yes, it's possible. You can handle it. Dan Ives puts out this report today. Listen to this extremely carefully. This is the crux of my commentary today, okay? He says there have been many times over the past few decades when geopolitical tensions and government actions have been a major overhang on stocks. You have wars, conflicts, policy issues, EU debt crisis, US-China cold tech war, COVID Asia supply chain, currency battles. All those things have happened over the years, and I've lived through all of them. With Trump's Mexico and Canada tariffs now beginning and China tariffs on deck, investors around the world are entering a very nervous period, especially for growth stocks, as the street digests this volatile period and how it impacts the tech trade going forward. He says, let's take a step back. Heading into Trump's second White House term, global markets know well the first phase of tariffs in some form was going to happen. It's all about how long it lasts and when negotiations start to get deals on the table with all three of these, and with Europe too, and other countries as well with reciprocal tariffs. Tonight will be Trump's first address to the joint session of Congress. He will detail the broader policy themes laying out for American people with tariffs, U.S. tech investments like Stargate, Apple, TSMC, and more. And it's a key and central core theme. Part of this entire process is getting the manufacturing back on U.S. soil. So what does this tariff policy mean for growth stocks? The biggest risk to this market and AI revolution trade in the near term was that Trump takes an aggressive approach to China with chip export controls and as part of the broader global policy. Accelerating these China policies, in our view, was the deep seek shot across the bow, which was a wake-up call to the U.S. tech world with this innovative LLM that from the start was assumed by many in the tech industry to be using next-generation NVIDIA GPUs that now is front and center as Singapore police have uncovered an illegal export operation around these chips. You got to listen to Nicholas Gibbs. You got to show up on Tuesday nights. Nick knows stuff that nobody else knows. He's the one that talked about Singapore. Nobody else. Didn't see it anywhere else. There's one chip in the world that is fueling the AI revolution, and that's NVIDIA. The current export controls around China have been a headwind, but the worry in the market yesterday is that Trump administration is going to further restrict these export controls with Singapore now. They'll be in the spotlight as more scrutiny will be on this potential conduit. NVIDIA market for China. In this AI arms race, the new gold or oil is in NVIDIA's GPUs. Is the tech trade capped until these tariffs clear? Any smart economist will tell investors that if these 25% Mexico-Canada tariffs stay in place, along with the 20% China tariffs, there will be major pain ahead for consumers and the economic foundation of this country. So there's no doubt. I've talked to you about tariffs over and over and over again, talked about how they don't fully impact in the way that people think they're going to at retail. But 25% tariff is pretty big. It turns out that it's on 5% it'll impact 5% of the exports. That may them be exactly right. But the impact is not nearly as big as you think, but it will be an impact. As we've navigated the 2018 to 2019, as we navigated back in 2018 and 2019, we caution this is all a game of high-stakes poker. What did I say above? To get other countries to the negotiating table will be very likely not last for an elongated period of time. Our view, he says, is that we are in the midst of the biggest tech transformation trade since the Industrial Revolution, with AI and $2 trillion of AI capex over the next 3 years. Tariffs and policy are not changing that. They could slow spots down in the near term, but the winner in this AI revolution is tech. NVIDIA, Microsoft, Alphabet, Amazon, Palantir, Salesforce, Tesla, xAI, Apple. He didn't say xAI, but he should have. Well, he can't own tech. That's why, because he's talking about stocks you could own. These are the stocks you should own in any weakness. All right. This will be an uncomfortable time period for growth investors. And ultimately, this is not the time to run for the hills in the tech trade. And instead, you want to own these AI winners. MoneyWise has this from Jamie Dimon to put the cap on it. The government is inefficient, not very competent, and needs a lot of work, Dimon says. In a recent interview with CNBC's Leslie Picker, the discussion around when Picker asked the discussion arose when hello. This discussion arose when Picker asked Dimon whether he supports the so-called chainsaw approach that Doge is using to the federal government. Although Dimon declined to give what he called a binary answer to that question, like, yeah, it's great or no, it's not good, he stressed the need for scrutiny in government spending, a key focus of Doge's efforts. It's not just waste and fraud, it's outcomes. Why are we spending the money on these things? Are we getting what we deserve? What should change? I think this needs to be done, he said. I'm hoping it's quite successful. So I hope you got the thread there. Trump knows what he's doing. I'm sorry if you don't like Trump. I'm sorry if you don't think that this is what we voted for. This is what Republicans voted for. His ratings, his polling numbers are still above 50%. And they're above 80% with Republicans. This is exactly what we were hoping for. You got to tear up this government and start over. You got to tear up the world economy and start over. You got to get the U.S. economy to be back on moving atoms around instead of just moving services around. And you can't do it all in the back of government spending. It was a broken system. All last year, actually for 2 years in a row, people kept calling for, oh, there's going to be a recession. Oh, there's going to be a recession. No, but the government just kept spending money and printing money all during that time, and it's unsustainable. And now it's time to pay the piper. You can blame it on Trump. I'm okay. You want to blame the recession? If we have a recession, you want to blame it on Trump? Fine. It's going to be specifically because of the things that he's doing to reset the world government and reset the world economy and reset the U.S. Government and the economy around the U.S. government. Those are going to be what do you want to call it? The proximate causes. But if you really want to know the reason, if you really want to know the cause, you got to go back and look at what Biden did for the last 4 years, which put us in a position to have to need the U.S. part of the reset, even though Biden is not necessarily responsible for the world economic situation. Although he could have made some of these changes if he'd had enough vision to be able to see that it was necessary. All right, so what is all this doing to the stocks this morning? We have got Tesla down 6.77%. That is $19.27. It is tipping upward again at this point. Seems to have found a bottom for today. That's $265.38. The Dow is down 608. It was down more than that earlier. That is 1.41%. NASDAQ similarly down 1.61%. And you got the S&P down 1.5. So all three actually right around the same 1.5%. Tesla doing worse than its normal delta after yesterday doing less than its normal delta. So kind of balancing that out. Apple is actually up this morning, but the rest of the Magnificent Seven are all down. NVIDIA is now at $112.05. I have to believe I'm not buying any. I'm not giving advice. I'm just saying. And then the Cathie Woods, except for Square. Square is actually up as well this morning. And Google just went into the green. Again, things are tipping slightly up. We seem to have hit, at least for a minute, we seem to have hit a bottom in today's market, and things are slightly moving up. It doesn't mean that it won't try again later and reestablish even lower numbers later in the day. Okay, let's go look at the bonds, which are in good shape this morning, I'm pretty sure. Let's go ahead and look. The 10-year is down 4.8 basis points at 4.132. That's about where it was in the after hours last night. So we still got, I think we can, maybe even this week. Larry was saying he thinks it might take until next week, but I think there's a chance we get into the threes this week. We could be looking at 3.99 by Friday, but I'm not arguing with Larry. It could be next week before we get there. The 2-year is down 10 basis points at 3.879. So there's a leading indicator for you. And the 2-month, though, is up 0.7 of a basis point. All right, let's look at the oil. Was down last time I checked. It continues down. Oh yeah, nicely. $1.23. Now we're down to $67.13. All right, now that's probably, if I remember right, that is probably an inflection point. That's probably an old bottom. So it might be hard for it to break through 67, but OPEC is saying that they're going to increase output. There's so definitely going to be plenty of oil out there. And I think we're going into the 50s on oil, which will be great for the economy. This is the thing I've been talking about also. Remember, and Larry was the one who pointed this out, not me. I said, hey, look, it looks like we're going to a recession. Larry says, well, if we don't go into a recession, it'll be because on balance, all of these things like oil prices going down, gasoline prices going down, interest rates going down, mortgages going down, car interest rates going down, all of these things will potentially cause the market to turn, the consumer to bust out, especially the consumer who has not been buying atoms, the consumer who has not been buying cars. They there's no houses to buy, but maybe there'll be more houses to buy if interest rates get down, to start to buying durable goods, to start going down to Home Depot and buying stuff. All of that stuff may start happening if you get these other things started. Now that's the balance. Will we tip into a recession, of a real recession, which you have to be for 6 months? And I think that's not as likely as that we will be negative GDP for several months. Or will we never get the negative GDP because all of a sudden consumers go out and start buying those products again? All right, so that's what we talked about last night. That will be a continuing theme until we learn more, until we can really get a handle on it. Okay, so we've got natural gas up 6.5% this morning at $4.40. So natural gas has popped back up. Gold is also above 2,900 again, 2,916, up 0.5% this morning. Silver up down 0.68. Interesting. Gold and silver going opposite direction this morning. Silver at $32 and copper down 1.43% this morning. You've got the dollar is off. Why do you think the dollar's off? Oh yeah, bonds are down, bonds are down, bonds are down. And what's now happening? Okay, now there's talk about the Fed having to cut, and maybe having to cut like 50 basis points, like at the next meeting. So everything just shifted on that. I haven't seen the betting on that yet, but there's a lot of talk now that because of what's happening with the Atlanta Fed, we'll see what happens with the job numbers on Friday. If the job numbers are soft, that could really cause the Fed to have to take an immediate action. But the Treasury coming down, the Treasury yields coming down is a huge signal, and is causing, of course, the dollar to drop a bit. Only, I think, is down 1%. Bitcoin down 3,061, has completely erased its own special Trump bump from last week. So there you go. And I think the rest of the different crypto coins have also retraced that entire thing. Okay, so that is where we are this morning. Let me tell you that coming up this morning, of course, later today, you've got Nicholas Gibbs tonight. You definitely want to come and hear what Nick has to say. He's going to get to take his victory lap on the whole thing with Singapore, and then Brian White will be after that. What last night was Brian White, a good one. I didn't look to see what the numbers were from last night on that Brian White video. It was a little late when I put it up. I'm sorry, but if you didn't watch it, we did a nice trip around a number of Tesla issues right now, including cyber cabs and other things. So I'll put that card up for you right now. And then, I think that's it. Like, subscribe, notify, all that jazz. It's been great talking to you. We'll see what happens the rest of the day.